It's time now for an in-depth look at the global markets this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at QM Securities. Mr. Yu, thanks for coming on today.
Thank you for having me.
Stocks in New York continue to rally, apparently getting a boost from the Trump administration's decision to indefinitely put off the tariffs it had threatened to put on Mexico. The S&P up almost 0.5%, the Nasdaq up a full 1%. Take us through the trade today.
Yes. If you look at the global equity market, it continues to show its rising trend. The expected additional liquidity into the system by all the central banks of the world by lowering interest rate is raising the expectations for the bull market. Also, as you mentioned, deal struck between U.S. and Mexico is raising expectation of global trade improving in the futures. If you look at Korean equity market, it has risen by almost 0.6% for Kospi, and also the Kosdaq was up again by 1.06%. More importantly, Chinese market have shown a very significant run today. The Shanghai index was up 2.6%. Shenzhen index was up 3.7%. This is coming in as a surprise because the continuation of the U.S.-China trade war seems to bring dent on the economic growth rates for China. But I think that people are looking at the trade surplus number of Chinese economy, where the numbers are coming in twice higher than expected, despite the U.S. Trade surplus have sharply fallen by more than 10% in the first 4 months of trading. But I guess what they're thinking is that the whole year, the U.S.-China trade surplus number will go down by 24.5%, which will put some more leeways in terms of the trade negotiations. So we do think that the expectation is improving in regards to the U.S.-China trade war issues right now. The G20 summit will be most important event for this year, which will be held towards the end of this month, and we'll be watching carefully on what will be the end results of that.
Yes, indeed. Stocks, as we saw, climbing back from the big hit they took, but oil prices still down quite a bit over the past month or two. West Texas at about $53.50. Do you see that heading below 50?
I don't think that it will probably head towards below 50. If it does, it will be probably short-lived. With the potential for global slowdown due to the U.S.-China trade war, oil prices have been remaining quite weak in the past 1 month or so. If you look at it from the recent peak of April, towards the end of April 20th, 24th, it has fallen by about 20% plus off in the last 1 month and a half. However, though, we think that the oil price should be remaining in a trading range between $50 to $65 over the longer period of time. The reason for that is because oil is about shale gas companies' price level for the break-even point. If you look at it, the shale gas companies are the ones that are putting in a lot of additional productions, and they need to generate profits to reduce huge amount of debt it carries. And I estimate that it needs to keep the oil price well above $50 per barrel in order to successfully lower the debt amount that they hold. So we think that despite all the U.S.-China trade war, the U.S. side will probably like to see the oil price remain above $50 in the future. So we think that because of that, the oil price should be in a trading range in the future.
Got it. Well, let's look at the data coming out this week and some other events. Yesterday, we had a report from the Korea Development Institute showing the local economy continuing to stagnate. On Thursday, we'll have another green book from the Finance Ministry, which will be closely watched. What else is on the schedule this week?
Right. I think that, as you just mentioned, the export numbers are going down quite significantly. So the Korea's heavy dependency on DRAM is putting pressures on the economic growth numbers. Also, some of the ship orders are coming in at a much lower than expected, so which is putting the pressure. So we need to look at those numbers. Also, for the additional new numbers that we're looking at is that any new employees or the labor data that maybe Korea will be adding additional 200,000 employees this month. People will be looking at that carefully. And also, government will be diagnosing the economy in terms of the economic trend through the Green Book. And they'll probably come out with some of the numbers in relation to what's happened to the Korean economies. Also, with this kind of numbers, they will come out with some additional measures for the monetary and fiscal policies going forward. Also, there is some news is that the interest rate cut can be exercised by the customers' employment and promotions and property increases and credit rating rises in the future, meaning that if individuals can lower interest rate in regards to the loans that they borrow from the banks, that will be positive news for the domestic consumption. So we need to watch out how well this is coming through in the future.
Yeah, that's an interesting thing going on there. All right, Mr. Yu, we'll have to leave it there for today, though. Thanks so much for your insights. We appreciate it.
Thank you very much.